In CCA sample problem number 2, we're going to take a look at additions to two different CCA pools, along with how to calculate the accelerated rate for CCA in the year of addition. Again, we have a taxpayer running a sole proprietorship with a fiscal year end of December 31st. We're preparing the tax return and we've got some carry forward information about undepreciated capital cost balances. We've got class 8 with an 8 grand opening balance, and we've got class 10 with a 42 grand opening balance. Now the required is, let's assume she has had additions to class 8 of 25,000 and additions to class 10 of 30,000. We need to figure out the maximum CCA deduction, and we need to indicate the closing UCC balances for all the asset classes. No problem, let's do it. All right, let's walk through this addition to Class 8, a 20% pool. We know we have an opening balance of $8,000. So we'll start out easy with $8,000. Now we have purchases during the year of $25,000. So we're going to add in $25,000. I have no disposals or dispositions during the year, meaning my total net additions for the year are $25,000. Great. So I have $25,000 that I'm adding to my Class 8 assets. Now, in order to calculate my deduction for the year, what I need to do in the year of acquisition or purchase, addition, whatever you want to call it, is I have to add in 1/2 of those net additions. So if my net additions are $25,000, which we know they are, I'll take my net additions, I'm going to multiply by 50%, and that equals $12,500. Great, this is what I'm adding to the pool. Now this is a temporary measure. I'm adding to the pool and increasing the balance in the pool. Once I increase the balance in the pool and I multiply it out by my 20% declining balance rate, I'm going to get a larger deduction than I would have otherwise if I hadn't added in that 1/2 net addition. So let's add everything up here. If I add all of these numbers together, I get 45,500. Now 45,500 is the base that I'm going to use for my CCA calculation. Now let's calculate CCA. 45,500 multiplied by my rate, which is 20%. 45,500 times 20% off the top of my head is, I believe, $9,100. Remember, this is a deduction. So this is the amount that's going to be removed from the pool. Now here's the fun part. What I'm going to do now is I'm going to say, well, remember back when I added in this 1/2 of the net additions for the year? That's got to come out now. That was only there temporarily, right? It was never there. It was never going to be a permanent addition to my pool. So what's going to happen is I will now deduct that 12,500, like so. And to get my closing balance for the year, I'll start with 45,500 minus 9,100 minus 12,500, which is going to give us the closing balance for the year of 23,900. Like so. So notable here, the CCA for the year is 9,100. The closing UCC for the year in this pool is 23,900. Excellent. Okay, now let's try this with Class 10, a 30% declining balance rate. We have an opening balance in our pool of $42,000, and we have additions of $30,000. So, 42. Additions for the year of $30,000. No disposition makes life so easy, so we have 30,000. Like so. We need to calculate 1/2 of the net additions. Our net additions were $30,000. We're going to multiply that by 50%. That's going to give us 15 grand. I'm skipping a few steps here because we're total experts at this now. So here's my UCC before I make the adjustment. I take 42 plus 30 plus 15 and a half, which gives us, I want to say 97,000? No, 87,000. You think I would have worked this out beforehand, but it's 87,000. Professional accountant here, everyone. Okay, so there's 87 grand. Let's calculate CCA on this puppy. 87 grand times 30%. What's my CCA deduction going to be? It's 26,100. Great. So that's a deduction. I then need to deduct the amount that I added in earlier, which was 15 grand. That's got to get out of there. It was only put in there temporarily. So now if I do all my major additions, I've got 87,000, which is my UCC before CCA. Then I deduct CCA right here. Then I deduct 1/2 of net additions right here. My total for the pool closing balance is 45,900. That's going to be my opening balance for next year. And the CCA deduction from income for the year is 26,100. Easy! Let's close this out by responding directly to the required. So, the maximum CCA deduction from business income for the year is going to be a total of $35,200. This consists of our Class 8 deduction of $9,100 and our Class 10 deduction of $26,100. The closing UCC balances, which again was requested in the narrative, are $23,900 and $45,900 for Classes 8 and 10 respectively. Great job, guys.